Today, Bitcoin soars for a second day, nearing $26,000. The DOJ is reportedly investigating the collapse of the Terra USD stablecoin. And the CEO of Maple breaks down what's next for institutions following the demise of the two main banks for the crypto industry. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices are surging for a second straight day, with Bitcoin briefly reaching the $26,000 level. As of noon Eastern, Bitcoin traded just below that mark. Ether soared more than 5%, trading below $1,800, and the Matic token rose nearly 5%. The latest rally is driven by new economic data showing inflation fell in February for the 8th month in a row. And while consumer prices rose 6% compared to last year, that rate was the slowest since September 2021. The persistent rise in consumer prices could reinforce the Fed's determination to raise interest rates to tame inflation. But the decision on next week's move will be a tough call amid worries about financial turmoil and bank runs. Okay, let's talk about the top stories. First, the Justice Department is investigating last year's collapse of the Terra USD stablecoin. That's according to the Wall Street Journal, which cited people familiar with the matter. According to the report, the FBI and the Southern District of New York have questioned former employees of the company behind the stablecoin in recent weeks. Last month, the SEC charged Terraform and its founder, Do Kwon, with defrauding investors in what regulators call a multi-billion-dollar scheme. Do Kwon has been on the run since the collapse of Terraform Labs last year. We reached out to the DOJ and the SDNY specifically, but as of noon Eastern, hadn't heard back. Next, Binance just confirmed to us that the world's largest crypto exchange is halting its sterling deposits and withdrawals for customers in the UK. Binance has been informed by its payments partner, Paysafe, that sterling transfers for new users were suspended yesterday. A Binance spokesperson told us that the firm will ensure that affected users are still able to access their GBP balances, adding that the change affects less than 1% of Binance users. The spokesperson also said the exchange is working to find an alternative solution for those transfers. Now, this is the latest challenge for Binance in accessing traditional currencies. Last month, Binance suspended all dollar bank transfers amid a growing crackdown on crypto by U.S. authorities. Reuters previously reported that the Justice Department is also investigating Binance for suspected money laundering and sanctions violations. A top Binance executive told Crypto World last week that Binance is ready to face penalties to resolve investigations into the company.
Are you, in fact, prepared to pay those potential fines?
We are prepared to deal with ever remediations regulators feel are necessary. That's a part of doing business in a highly regulated industry. We are prepared to do whatever we need to ensure that, regulators continue to trust our platform and they know that we are continuing to do the right thing. We're a very different company than we were, 2 years ago.
And finally, Meta just announced new layoffs at the company, and amid the shakeup, the social media giant is also cutting off support for NFTs on its platforms after less than a year. Meta's fintech head tweeted yesterday that the social media firm is winding down digital collectibles for now to focus on other ways to support creators, people, and businesses. He added that Meta is going to focus on areas where we can make impact at scale, such as messaging and monetization ops for Reels. Meta rolled out support for creators to share NFTs on Instagram and Facebook last year when it exploded in popularity, but trading volumes for tokens plummeted during last year's crypto meltdown. All right, on to our main story. The Silvergate Exchange Network and Signature Bank's Signet platform were critical in allowing institutions to transfer US dollars instantaneously and keep the digital asset economy moving. But earlier this month, Send was discontinued just a few days before Silvergate announced its liquidation. That was, of course, followed by news over the weekend that regulators shut down Signature. So Crypto World's Jordan Smith spoke with Sid Powell, the CEO and co-founder of Maple, an institutional capital marketplace built on the blockchain. He weighs in on whether a new banking partner can rise amid all the scrutiny on banks.
All right, so we have a very different crypto banking environment from a week ago, obviously with the demise of Signature and Silvergate. Just how big of an impact will the demise of these two biggest crypto banks have on the industry and its ability to go mainstream?
I think in the short term, the demise of those two banking institutions will be important in that it now makes it harder to get on and off ramps, so get into and out of crypto. So that just makes it harder for crypto to kind of touch mainstream business. But I think people had started preparing for this. So if you look at Circle and Coinbase, what you'll find is they were probably diversifying their banking partners. So that somewhat mitigates the risk. And then I think, interestingly, you know, necessity is the mother of innovation. And here, what we've seen is there's now a pretty severe constraint placed upon the industry. And so, what we'll see, I think, is the outgrowth of on-chain solutions to meet this need for crypto companies. And I think that will showcase some of the key differences in where crypto has actually leapt ahead of traditional finance in things like self-custody and transparency.
I want to talk about Silvergate specifically, because when we were originally discussing this topic ahead of this interview, I think one of the points that was made to me was that how important the SEN network was to crypto businesses. Can you detail what the Silvergate Exchange Network, or SEN, did for crypto businesses, and how the crypto industry has adapted to its closure?
Yeah, so the SEN network, which was operated by Silvergate, you can think of it like an internal network of bank accounts that institutions would have with Silvergate. And that allowed them to instantaneously transfer money between them and other participants. So imagine that all of the exchanges and all of the market makers had accounts with Silvergate, and it meant that you could instantly transfer funds between different exchanges. That was really important for trading liquidity, particularly when there was a lot of retail participation in trading on exchanges like Coinbase, Kraken, Binance. And so what you see is, with that network down, they've had to find other institutional participants, have had to find other alternative ways of balancing volume and trading activity between exchanges. So what you can already see, that what's happened is the spreads on exchanges and between exchanges have widened. And so prices are now more inefficient. And what you'll see is, in my view, a very quick race by new competitors to offer a similar network, because it's so profitable if you can start to get those network effects. So banks like BCB and others will look to kind of step in and fill that vacuum.
Yeah, you talk about a replacement. I mean, how realistic is it that we'll see one in a timely manner? I mean, banks are clearly facing a lot of, I would say, panic, but also regulators are ready to impose harsher restrictions on banks after SVB, Silvergate, and Signature. Can a replacement for crypto companies exist in this environment right now?
It's interesting. I would say the market will answer that. And what you found is that regulators made it very tough to bank crypto companies. And so across 4,000 banking institutions in the US, you ended up with half a dozen or so who wanted to tap crypto because they viewed it as an interesting market niche for themselves. So since it remains a tough environment to bank crypto, it also means that if you are a banking institution who wants to touch crypto, there has to be a commensurate reward for that. And I think, given it is a competitive market, new banks will step in to fill that void because they see an opportunity to carve out a market niche for themselves. So I think there'll be some initial trepidation, but there are still banks touching crypto, and they will see an opportunity to kind of carve out this network effect. And it's important to note that it's not actually necessarily a technological problem to operate a Silvergate-like network. It's more a commercial problem. You just have to onboard all of the participants who would want to use it so that you can allow the transfers between their accounts.
What does all this turmoil mean in the last week mean for prices? I mean, there was a lot of speculation around the Fed and will they, won't they, with interest rates. But separate from that, I mean, crypto prices are pretty unfazed by the closure of Silvergate itself. They seem to move a little bit more with Signature. What's the environment for crypto investors after everything we saw in the past few days?
Well, I think the prices have moved up. One, both off the back of some considerations around inflation, but I think what people are seeing is the benefit of self-custodying assets. So whilst crypto might be more volatile, people are seeing the benefit of having full control over those assets themselves. And as in other times, they often view it as a bit of a hedge against instability or an offset to instability in the banking system. And what we've seen over the last week is, despite the government's best efforts to intervene, that people do still perceive the banking system as having a lot of instability built into it and some systemic risks there.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.